Good morning, this is the latest market news. I'm Uliana. Asian stock markets were mixed in cautious trade on Wednesday, with Japan weighed by a stronger yen, while Australia was supported by gains in mining stocks. There was a negative lead from the US, where Wall Street finished lower, with the S&P 500 marking its first loss in 9 sessions. The focus was on Federal Reserve Chairman Ben Bernanke, who will give his testimony to Congress later in the day. The central banker's comments will be examined for signs of when the Fed will start to roll back its bond buying program. The stronger yen overnight weighed on Japanese stocks, with the Nikkei stock average falling 0.2%. Chinese stocks were mixed, with the Shanghai Composite Index down 0.4% in the mainland and Hang Seng Index up 0.2% in Hong Kong. In a move which has propelled many of its major counterparts by comparison this morning, the US dollar has been sold off by investors as they take a cautious stance ahead of Ben Bernanke's testimony to US congressional panel this evening. The greenback lost 0.8% overnight against the Japanese yen on news that core inflation in the US remained in check, giving the Fed more room to keep its loose monetary policy intact. Though it recovered slightly early Wednesday, last at 99.34 yen, compared to 99.10 late Tuesday in New York. Meanwhile, in Europe overnight, US dollar weakness was the overriding theme, and despite the unexpectedly fall in German investor confidence, the shared unit is in stronger position this morning, with the euro-US dollar currently swapping hands at a rate of 1.3167. The number of jobless workers in Britain is expected to fall again in today's monthly labor market report. Later, the US releases data on new residential housing construction for June, followed by congressional testimony by Fed Chairman Ben Bernanke. US housing starts 12:30 GMT. The pace of new housing construction has hit some turbulence lately, although it's not yet clear if this is noise or an early sign that the easy gains are behind us. The main source for wondering what comes next is linked with the recent rise in interest rates, which has lifted mortgage rates to highest levels in 2 years, albeit off historically low levels. Despite the risks, analysts think that we'll see a modest gain in new residential housing construction for last month. It was the latest market news provided by ICO FX. Goodbye.